Monthly inflation numbers for February will be released shortly by the Bureau of Statistics. Let's go live to our business reporter, Ed Boyd. Ed, a lot of focus, obviously, in the last 24 hours on Jim Chalmers' fourth budget, but specifically some more data out today, and the ongoing energy rebates are expected to keep inflation steady at 2.5%.
Yeah, that's the expectation, Kieran. We'll get the numbers in about 5 seconds from the Bureau of Statistics. But the additional energy rebates, which will kick in the second half of this year, are obviously going to keep inflation low as well. The numbers have just dropped. Inflation has come in slightly better than anticipated at 2.4% during the month of February. That's the headline inflation figure. Now, the trimmed mean figure, which is the figure the Reserve Bank looks at more closely, which strips out big rises and falls in costs, came in at 2.7%. So remember, the Reserve Bank's mandate is to keep inflation within the target band of 2% to 3%. Clearly, inflation is within that band right now. They also need to maintain Australia's employment market. And the unemployment rate is currently at 4.1%, which is close to 50-year lows. Just reading a little bit from the media release here from the ABS, they say consumer price indicator rose 2.4% in the 12 months to February 2025. Annual CPI inflation was slightly lower in February after holding steady at 2.5% for the previous 2 months. The largest contributors to the annual movement were food and non-alcoholic beverages, up 3.1%, alcohol and tobacco up 6.7%, and housing costs did rise 1.8%. When prices for some items change significantly, measures of underlying inflation like the trim mean and CPI excluding volatile items and holiday travel, that gives us more insights into how inflation's trending. And the trim mean was 2.7% in Feb. This was down slightly from the 2.8% in January and has remained relatively stable for 3 months. The CPI, excluding volatile items and holiday travel, rose 2.7% compared to 2.9% in the 12 months to January. So clearly the figures show that inflation is slowly cooling. Remember as well, Kieran, this is the monthly indicator. It's not the quarterly figure the RBA looks at really closely. The monthly indicator only measures 60 to 70% of the CPI basket, so it's not a fully accurate reading of inflation, but it is a good sign showing inflation has fallen from 2.5% in January down to 2.4% in the month of February.
And Ed, the RBA is going to hold its April cash rate decision next week. The market, what are the expectations? They were that they would remain on hold. Is that still the case?
Look, currently the pricing in was about 90% chance of rates being on hold, about a 10 to 11% chance of rates being cut. I can quickly check to see if the market's changed at all in the past couple of minutes since these RBA figures have come out. But really, these are figures that the Reserve Bank clearly watches very closely. We've got the Reserve Bank here still at 90% chance of no change. So the market hasn't moved on its prediction for rates to be on hold next week. We'll obviously hear from Governor Bullock, get her reaction to the federal budget as well. We know that the big spending items in the budget are something the RBA watches closely because they do add to inflation. Here's the stock market today, up about 0.8%. It's finally gone through that 8,000 point barrier. The market was obviously at 8,500 points in mid-Feb during profit reporting season, then was sold off. It's now getting back towards that figure, which is a good sign. Aussie dollar is at about 60, buying 63 odd US cents. It's picked up a little bit over the past couple of days, but is still pretty weak when compared to other big currencies around the world. So investors are clearly buying shares at the moment, Kieran. We're seeing the market up 0.8%, and the RBA is still expected to keep rates on hold next week. But it's going to be interesting to hear Governor Bullock's reaction to the federal budget and some of those big spending items in there, and whether they will add more to inflation in our economy.
Yeah, we always listen to her closely, and even more so in the wake of the budget, that's for sure. Ed, thank you.